Hey, over here, let me ask you something. If you're a real estate investor and you listed your property today, would it sell? Well, I know you're probably gonna say, of course it would sell. But what if you were buying another property and you couldn't close? Then what would happen? You see, investors are stuck. And it isn't because there isn't any deals or because they can't find the right deal. It's because they don't understand what just changed. A lot of people are talking about real estate and they're saying things like, oh, the market's just correcting. Prices are gonna be fine, just wait. But you know what? That's surface level thinking. And that's gonna be getting a lot of people in trouble. But you know what? If you're trying to buy your very first home, this could help you. But if you're an investor, this is gonna be one of the most important shifts you'll ever see. And this is gonna be one of those shifts that's either gonna level you up or completely leave you behind. I mean, the real estate market is all but frozen up. Let's start with the reality of the situation. Did you know that right now there are over 600,000 more sellers than there are buyers? Think about that for a second. There's more inventory and less demand. Let me repeat that. More inventory, less demand. Now layer that on top of the fact that homes are taking the longest time to sell in over a decade. I keep hearing this. And here's one of the things that should wake you up. Buyer demand is at record lows. And it makes sense. Rates are high, there's uncertainty, there's a war. But let me ask you something. Who do you think is left in the market? Because it's not the average buyer anymore, right? You see, the retail buyer is all but disappearing. And when that happens, the entire real estate game starts to shift. Here, let me break it down for you like this. Over on this side, you got the buyers, and on this side, you got the sellers. We're gonna simplify this. Rates go up, they lose about 10% of their purchasing power per 1% increase. So what happens then? Well, the house they could afford last year, they can't afford this year. They can't afford it right now. And most of them, well, what do? They just tap out. Oh, it wasn't the right time. Oh, they stopped looking, they stopped waiting, they freeze. And the sellers, well, let's look at the sellers on this side. They're anchored. They can't do anything. They're stuck at 2021 prices where things were crazy. They think my neighbor got this house and my house is worth this and the buyer that they need is, anyway, it's all in their head. It doesn't exist anymore. The numbers from 2021 till now don't matter. So look at this right here. This is why nothing is happening. This is why we're frozen up. It's the pattern that we're in. And this is where people start to panic, especially the sellers. Because when deals stop happening, people assume something is wrong. And you know what? Something is wrong. So let me show you what's really happening under the surface. It comes down to affordability. In some areas, it takes nearly 100% of their income, of a family's income, to buy a home. In rates, well, they're over 6% and they're pushing buyers out daily because they keep going up. And then let's talk about inventory. Oh yes, inventory. It's rising faster than the demand is. So right now, we've got sellers holding on to assets that they can't move. We got buyers who are unable to qualify, and you got deals falling apart by the day. And everybody is waiting on the same thing, the bank and the Fed. So let me say this clearly. This is not a housing problem. This is a control problem. Just think about it, right? If your entire investing strategy depends on interest rates, approvals, and lending conditions, then you don't control your business because you control none of those. You should learn the Serenity Prayer. The system controls all of that. And when the system tightens, like it is, you're frozen. That's it. Just like every other real estate investor, you're frozen. I'm seeing this firsthand. Now let's just talk about a strategy because this is where the investors are going to be separated. Number one, price for velocity. Take your ego out of this. If your property isn't moving, the market already told you something. You're priced too high. Number two, terms. Price expands if you get terms right. This is where the amateurs lose and the pros win. See, you can structure seller financing, rate buy downs, creative payment terms. It's all in the structure. I've done this numerous times. But here's the problem. Most investors can't do this. They can't do this because they don't have control of their capital. and you need to have capital to win this game right now. And this is where everything changes. Let's talk about the buy side. This market is built for investors. Let me explain to you why. The reason why it's built for you if you're an investor is sellers right now are completely flexible. The deals are all negotiable and time is on your side, but it's only on your side if you can actually act, if you can act fast. So here's the thing. Now that you see where people are stuck, and we see where people get stuck all the time, they find the deal, they see the opportunity, and then they say, oh crap, where am I gonna get the money for this deal? Well, that's the problem, right? It always comes back to the money. That's why a lot of deals are falling apart. They get them locked up and then they don't have the money. That's exactly what's going on because they still think like they're a retail investor, right? Exactly, because they still are thinking like a retail buyer. This is one of the reasons why we built privatemoneyclub.com. It's a community of lenders and borrowers because I kept seeing the same thing happen over and over. I saw good deals, bad execution. I saw good borrowers, but they had no idea how to get the capital from private lenders. They had no access to capital except for the banks. They had no understanding of the structure, the framework, and they had no network. So what happens? The deal dies. So inside Private Money Club, what you're seeing right now is different. You've got investors funding each other's deals. You got lenders and borrowers in one community. They're structuring creative financing deals. They're structuring real problem-solving solutions. They have no access to capital, no understanding of a structure. They have no community and no network to pull from. So what happens? Well, most times the deal just dies. But inside of privatemoneyclub.com, what you're seeing is different. I'm seeing investors getting funded. I'm seeing lenders, individuals, lending on those deals. And I'm also seeing a lot of investors, especially borrowers, getting very creative in their financing. And this is solving real problems. And these aren't theories, folks. This is happening every day on Private Money Club. There are real deals happening that aren't frozen, that aren't locked up. It's because they tapped into this network. And listen, if you're new to this world, the Private Money Club world, that's fine. We created a thing called PMC Quick Start. And this is where most people would go to start because they don't need motivation. What they need is they need some type of a roadmap. They kind of need a GPS. They need something that walks them through it. How to find deals, how to analyze the deals, how to structure the deals, and how to actually get the deals funded. Because knowing this and doing this are two very different things. But let me take you one level deeper. Let's walk through a real investor mindset. Let's say that you sell a property. You walk away with $300,000. Now just put yourself in those shoes, right? Most people would leave that $300,000 sitting in a bank and they'd rush into another deal because they'd have that FOMO happening. But what if you did this? What if you repositioned the capital first? Put it into a place you control where you can earn uninterrupted compounding interest. How about putting that capital in a properly designed whole life insurance policy? I know that sounds crazy, right? But that allows you controlled capital. It gives you a system that doesn't let you just spend the money on frivolous things. It lets you borrow against it while keeping your capital growing, while keeping the compounding working uninterrupted. Then you can deploy the money the next time you find a deal, but you're gonna spend more time thinking about the deal because here's the difference. You didn't have to go ask a bank for the capital. You have the capital. You are in control of the repayment structure. So when you deploy the capital, you're paying yourself back. You control the timing aspect. And the other thing too, every single dollar that you pay back goes back into your banking system, not theirs. That's key. Too many real estate investors give all their money to the banks and the institutions, but here you become the bank. Now listen, this isn't for everybody. I want to be very clear. This is what the high-level real estate investors are doing. We see them every day. How do you think Private Money Club came to be? Private Money Club came to be because we had lots of people that had money in specially designed whole life policies. That's the truth. The infinite banking concept gives you control of capital. Private Money Club shows you how to deploy that capital. And when you combine the two of them, you're not stuck anymore. Because now you've got access to capital and you've got control of your capital. It doesn't matter what side you're on. You could be the lender or the borrower. So let's connect the dots here. Retail buyers, they're stuck because they have no control. They're playing in a system that they control none of it. And sellers are stuck because they have no structure. The market is just stuck right now. It's stuck because everybody's using the same system, and that system is the banking system. But when you step outside of their banking system, the institution, if you will, and you become your own private banking system, this market right now becomes one of the best markets to operate in because you can control all of the terms. You can control the entire process. And here's the thing. I think sometimes I need to explain the difference between traditional banks and insurance companies. Banks, as you know, you go in and you deposit money in the bank. The bank has to keep 10% roughly of the money you deposit. That's called Tier 1 capital. And then the bank moves the rest of that. That's the fiat banking system, okay? I've done other videos explaining that. But because of that, banks, by sheer nature, are playing with somebody else's money. Banks, by sheer nature, rely on the Fed, and they get stuck when everything in the system slows down. And that's where we're at right now. We got a liquidity issue. I mean, private credit right now is freezing up. In companies like BlackRock, they've got private creditors that can't get their money out. You want to talk about it freezing up? It is frozen. So when you play within the confines of that system, you're also frozen, whether you want to be or not. But when you step outside of that and you go over to the insurance companies, the giant mutually owned life insurance industry, they're not stuck because they're not using somebody else's money. They're using their own money. Now, let me put it to you this way. These insurance companies have been around for hundreds of years, and the wealthiest families throughout history have used them because of this, because they are the most financially stable companies in the financial system. Now, because they're making promises, the life insurance companies are making promises to you when you buy a policy. And that promise is they will pay a benefit to your beneficiaries when you die. But here's the thing. They need to have that money set aside in surplus because they don't know when you're going to die. They have actuaries that can predict that into the future, but you know what? Something could happen tomorrow and you could pass away and they have to pay that benefit. So they can't play the game banks do with the 10% nonsense in the fiat. They have to actually have the capital. And because they've got billions and billions of dollars sitting in surplus, they want their money to work for them as well, which is why specially designed high cash value whole life policies can function in a way that puts you fully in control because you're not playing by banking rules, you're playing by your own set of rules. And the only thing that dictates those rules is your contract with the insurance company. And that contract, just so you know, happy to show you one, is very favorable for this. Very, very favorable because the insurance companies, they want to make their money work. They want to lend that money back out to you because it's a zero risk loan to them. Because one of two things is going to happen. Number one, you're going to cancel the policy and they're going to be made whole because your cash value was collateral, or you're going to die and they're going to be made whole because the loan is going to be subtracted from the death benefit. So no matter what, the life insurance company wins, but you also win because your money is able to continue working for you uninterrupted. So when you look at banks versus giant mutually owned insurance companies, it's not hard to see why a private banking system created using life insurance companies and specially designed whole life can be extremely favorable to you, especially in market conditions like this right now. But when you step outside of the traditional banking system and you create your own private banking system, this market right now becomes one of the best markets to operate in because you're in control. Now let's just take a step back and let me explain why. Let's talk about traditional banks, okay? You understand for the most part how they operate. You take your hard-earned dollars and you deposit your money in the bank. The bank is required to keep roughly 10% of your money in reserves. They call that Tier 1 assets. The remaining 90% can be lent out over and over and over again. So the bank is not playing with their own money. The bank is playing with your money. The bank is playing with the Fed. That's it. The Fed sets the rules. And when you try to play inside of that and something goes wrong like it is right now and that system starts to freeze up, you're frozen with it. I already said this, but let's talk about the insurance industry, the life insurance industry. They're not playing with your money. They're playing with their own money. For hundreds of years, they've been making promises that they will pay out a death benefit the day you die. But what you have to understand is these life insurance companies, these mutually owned life insurance companies, have to have the money in surplus to pay that money out when you die. So therefore, they've got the money. It's kind of like Arby's. We've got the meat. Well, the insurance companies, we've got the money. And you know what? The wealthiest families throughout history have always known that the insurance companies are the ones that are financially stable. The banks, those are always the ones that are always going out of business, having liquidity crunches, having runs on the bank. You've already seen this. That doesn't happen in the insurance world because they've got the money and you can use it if you learn how to use it. So if you're serious about investing in real estate, I think this can be one of the best times. And if you want to learn how to find real opportunities and how to structure those deals and fund them without relying on the banks or the institutions, then check out privatemoneyclub.com and go through PMC's Quick Start program or just book a call with our team. You can call our team at 833-JOIN-PMC, 833-JOIN-PMC. You see, this market isn't broken. It's just separating the real investors from everybody else. So where do you want to be? You want to be the real investor winning the game? Well, if you want to, check this video out right here, Secrets of the Rich. We'll see you next time.